Every ETF has a story, and some of them deserve to be told. ETF Stories from Resilient Advisor brings you some of the most interesting stories from the world of ETFs. Learn more by visiting etfstories.com.
Going independent is incredibly rewarding, but most advisors don't end up in the best place for their business. They instead end up getting sold by smooth-talking recruiters, custodian reps, or worst of all, aggregators who don't have their best interest in mind. The Independence Incubator from Resilient Advisor takes a fiduciary approach to independence. Our clients pay us directly for unbiased guidance on the best path for their business. Don't get sold, get educated, and get unbiased guidance. Visit independenceincubator.com to learn more. ETF Stories is designed to be a short-form interview where ETF issuers, portfolio managers, and index providers can come on and tell their story in a short, concise format. Today, I'm speaking with Michael Venuto, portfolio manager of the Amplify Transformational Data Sharing ETF, symbol BLOK. Mike, thanks for coming on.
It's great to see you again, Jay. Excited to be here talking BLOK.
I love talking BLOK. Let's get right to it. For folks where BLOK is a new story to them, what is the investment thesis of BLOK?
Okay, so you said that mouthful name, Amplify Transformational Data Sharing ETF, which was, what we had to do 3 years ago to get the thing out. But the ticker tells the story. What we're investing towards is exposure to the blockchain industry, right? Whether it's the crypto miners or the transaction companies or that boring part of blockchain that still makes $50 billion in revenue, tracking chickens at Walmart or whatever. We actively go out there and engage in finding the best public companies that we can to get exposure for our investors to this transformational change in how data is shared through blockchain.
Excellent. So in addition to your team at Amplify ETFs, tell us a little bit about the portfolio management team and the resources that go behind executing this active strategy.
Sure. So BLOK is actually a partnership between Amplify and Toroso, and a third partner, Emeritus. It's a research shop working with EQM. So at Toroso, we act as the active sub-advisors on BLOK as well as a partner in the fund. The Toroso team leading the portfolio construction and security selection for BLOK is myself, Mike Venuto, as the CIO, and Dan Weisskopf. We call him the ETF professor. He's really the one who's out there meeting with the managements, talking with Michael Saylor, talking with Michael Novogratz. He's flying to Texas today to meet with the folks at Hive as well as Riot. We've sent him to Iceland to review the mines. We've sent him to the Bitcoin Mining Council to hear how they're thinking about moving towards a more socially responsible or ESG approach to mining. So Dan really does a lot of the heavy lifting. In addition to that, we have an analyst that's dedicated to maintaining our database. There's about 200 public and private names that we currently follow in the blockchain and cryptocurrency arena. His name's Ryan Fitzgerald. And then we have the full Toroso execution team that is run by Charles Regas and Eric Kelly and Chow. This team is really there to use all the benefits of the ETF wrapper to help get exposure to these amazing themes that have, a lot of volatility, a lot of upside volatility, occasional downside volatility, but doing that in a tax efficient manner is extremely important, right? We were able to transition the portfolio and realize a number of gains in a substantial way, but outside of a distributable capital gain to investors. All of those components come together to have the team behind BLOK.
I got to tell you, longtime viewers of this show know my passion behind the ETF-friendly nature or the tax-friendly nature of these ETFs. Nowhere is that more applicable than in a high-growth industry like this. So let's dig into the investment process you and your team go through for BLOK.
Sure. So the first thing that we're really looking for is exposure to blockchain industry. Unfortunately, there's not some easy process to that, right? You can't just go into Morningstar or FactSet or Bloomberg and press a button and say, show me all the blockchain names. Um, and to that end, the first and most important thing to deciding exposure is nomenclature, defining it, right? So we break every company in our 200 name database into one of our 7 segments. So the segments can be things like, the largest segment today is what we call on-ramps or transactional businesses. These are the companies that are taking TradFi, traditional finance, and connecting it with blockchain and decentralized finance. Then you have the miners. That one's pretty obvious. These are the ones furthering the chain. There's also venture companies, conglomerates. There's what we like to call exposure, right? We think of Bitcoin as the largest public blockchain out there. So we want exposure to that, and we set that as a segment that we get through various different securities. Once we have that, we decide how much in each segment we want to be in, and then we rank our positions as core or non-core. Core position is going to get a 3% weight. We'll allow it to float up to around 5. And non-core is going to get about a 1.5% weight that will allow to float up to about a 3. And that's really all there is to it, right? It's security selection. That's the most important part. That trust but verify concept of making sure that everything is kosher with the balance sheet and the reality of the business, and then fitting that into the structure of segments and weights and core and non-core.
I got to tell you, Mike, before we get into talking about some of the holdings, I want to tell you a story. Yesterday, I went to my local community credit union, and I was simply closing an account with $600 in it and moving it over to an account within the bank. And I have been a member there for about a decade. It took me an hour, 4 signatures, and 2 approvals from people going up the food chain. And I just sat there during the whole time and thought, this industry is going to get crushed by the blockchain and all the technologies that are coming. And there are some really exciting stories out there. I did not know there were 200 companies that are up for consideration for this ETF. So let's talk about some of the holdings that really you have your eye on now in the portfolio.
Okay. So the hot names that everybody was talking about earlier this year during the bull run were all the miners, right? Hive, which is Frank Holmes's company. Ironically, he's also the man behind Jets, the Jets ETF. So, it's interesting, all the crossovers between ETFs and blockchain, as well as Riot and Mara and CleanSpark and Argo. These names are very much like the gold miners are to gold. When there's a run, they run harder. When there's a drop, they tend to drop faster. That said, at their current run rate and the current price of Bitcoin, crypto in general, they're going to be generating about $22 billion a year in revenue. To put that in context, the entire ETF industry in the US only generates about 11 billion in revenue. So these crypto miners are almost twice the size of, BlackRock, Vanguard, State Street, and all of us combined. So those are very interesting. Over the last couple of months, we've done a transition and focused more on transactional businesses, right? So Coinbase coming public. There's a company called Mogo that we're extremely excited about. It's a fintech firm in Canada that also is a major shareholder in CoinSquare, which is kind of the Coinbase of Canada. Voyager, super exciting company, right? It's kind of the Robin Hood of crypto exchanges. 85% of their revenue comes from cryptos other than Bitcoin and Ethereum. So it broadens the exposure. Those are some of the names that we've been really excited about, because when you have volatility, it's these exchanges that benefit even if the price is going down because the volume goes up. So that's where we've been really focused. Another thing that's really interesting that we can do as an active fund that the others can't is we can participate in IPOs. We can buy when issued SPACs, which we've done that. There's a SPAC that we currently own that's bringing Topps, the baseball card company, public. And what's really interesting there is their embracement of NFTs, right? So blockchain's a lot more than just Bitcoin, right? It's all these things that can be done to make things unique in a digital world. The Internet 1.0 democratized information. That's why we can have a podcast and reach more people than CNBC. Internet 2.0 is about making that data unique and secure, and that's all done on the blockchain. NFTs, gaming, all these new forms of decentralized data sharing and finance are super exciting to us. And as an active manager, we're really seeking these out.
So let's talk about positioning in a portfolio. And this is always it's the $1 million question for financial advisors who are trying to figure out how to add this to a portfolio. First, I want to play you a clip from your partner at Toroso, Michael Gayad, and I asked him how advisors should potentially look at Bitcoin when adding it to a portfolio.
Sure.
Well, I think, as we know, a lot of advisors want to get in the space, but they're not quite clear on how to do so. And their clients are obviously asking about it quite a bit. I'm sure they were asking more about it when it was at all-time highs than where it is today, effectively having gone nearly a round trip, losing almost all the gains for the year. It's not clear. It's not the only real technical rule I've seen that works with Bitcoin and cryptocurrencies so far, in terms of how it's additive to a portfolio, is rebalancing. Meaning, if you put a 1, 2, 3% allocation, and every single month you're simply harvesting the volatility by selling back to the 3% when it's gaining and upping it back to 3% when it's falling.
Gayad always with the sharp tongue, but
yeah.
But the spirit of his answer is using it as a tool to rebalance as it goes up and down. Now, we're talking about BLOK in its implementation. Are there any comparisons there, or how do you feel advisors should look at implementing BLOK in their models?
Okay, so let's start with, Bitcoin has gone up a lot this year and it's gone down a lot this year. And it's not quite a round trip, but it's close. BLOK is still up over 30% for the year. And that's because these are public equities. These are companies that are making money off of what's going on in both blockchain and crypto. They're not just the price movement around one large public blockchain. So that said, I will agree with Gayad on the rebalancing, right? So BLOK may not be a one-to-one proxy for Bitcoin, right? It's not intended to be. It's more the GDX to the GLD, right? Think of Bitcoin as the underlying commodity and BLOK as the miners and picks and axes out there. That's also actively managed, right? We were able to take gains in the miners and things. Now, rebalancing. So Gayad's one of the team members. David Jacansky's another one that's on our team at the think tank and also a big part of what we do in this. And they're both rebalancing gurus, right? Rebalancing with any very volatile asset is extremely important, right? So, the CFA and Matt Hogan did a piece as well on this where, regardless of the ups and downs, it's the fact that the asset class of cryptocurrency is extremely volatile and highly uncorrelated to everything. BLOK is less volatile and highly correlated to cryptocurrency. That's our value prop. Now, in terms of allocation, we still don't think this is a core of somebody's portfolio. This is a satellite. What we have seen is more and more advisors having thematic portfolios, and that's where we tend to get higher weights. We've seen Wisdom Tree come out with something like that. The folks at American Portfolios Group working with Jacansky came out with they call it the theme catcher portfolio. I've seen Lunt do some stuff here. So you see more and more thematic portfolios coming to market. I think that's where BLOK tends to get the larger allocation.
Yeah. So, Mike, I would agree. And prepping for this ETF Stories episode, it just became very clear that this would fit in very well in a thematic portfolio with a strong rebalancing strategy given the volatility. Mike, appreciate you coming on and talking about the BLOK ETF. For podcast listeners, please visit bloketf.com. That is bloketf.com to learn more information.
Thank you very much, Jay.